See if we can get this started. Good morning. Hey, good morning. I'm gonna be doing like a quicker stream today, probably only about an hour or so. Just kind of wanted to walk through the chart again, and with the earnings coming up, it felt pretty important to just check in on it again. I think the price action on Friday was fairly straightforward. I hope people didn't get caught by that pump at the end of the day, because it looked like it was going to run all of a sudden, and it just head fake, classic AMC stuff. But I mean, with the volatility there, but it also was more of a back test on some prevailing rising trends that we lost, and the shoulder is completed by doing that. So there's an element of mystery perhaps about why it happened the way it happened, I guess. And there was a lot of weird stuff that happened at the end of the day Friday across the market. It was just kind of strange. But it seemed more or less by Monday, today, by the end of the day, I suppose, even on Friday, that it was ironed out. I had talked about on Friday IWM, and I actually played a bull contract and got out of it the same day, and then entered into a put contract, because I think IWM, which is your small cap, I mean, it's kind of obviously in a moment of truth type place, and most people are expecting a big market sell-off. If you read the fear into the news and all that stuff, it seems like everybody's saying the same thing. I'm not so convinced that's the case. I think what we're experiencing isn't going to be like a massive turn down, not the way that a lot of folks are expecting. It's just my opinion, and a lot of it comes from maybe the writing on the wall of the last few years, just having this constant uptrend, and then you're sort of feeling like, well, it's time. It got to be time, right? It's got to be time to turn around. And SPY's been running, and Nvidia is like, people are thinking that's overdone, even though it's really not. At the same time, it's really undervalued in a lot of ways. Still, even though it had like a massive year, it's still technically undervalued if you look at the analytics of it in terms of where it's trading versus what its earnings are. And we've been talking about like AMC and GME a lot, like pretty much all the time. And they're also in a place where we were expecting there to be kind of a push up towards 4, and that's happened. And the real question, I suppose, from that point is like, well, is that it? And I don't think the answer is yes. I think there was always going to be a push and a bigger pullback. And when I'm looking at this AMC chart, especially the one that you can see here on the right side, I see the exact same chart basically here on AMD, which is interesting. And for that matter, I kind of see the same chart on IWM. Like, the market on the whole had a sell down period after the rallies in December and going into the new year. Everybody was kind of going down. Not everybody, but a lot of these stocks were kind of coming back down, chilling out. So this feels a little like a dead cat bounce then. And you're seeing that bounce is not resulting in like a breakout and a move. And even on my chart, had you come here, a few weeks ago, I had this as a potential, it's called an even atom bottom, where this is like a potential flag, and as long as it gets back above, it might just go. And so what happened last week, and I posted about it, I think in the Discord a few times, was I was like, well, that's weird. Everything's kind of at the resistance and doing these like little fake out pushes. Everything was sort of like pushing up against whatever its resistance was. But this is really important, because what comes next seems to be just a bearish breakdown. But the thing is, and I think this is true for much of the market right now, at least the stocks that I'm following, there's a lot of these that had these pushes. A lot of them did push over their creeks at different times. And AMD did the same thing right here. It may be a little difficult to tell on this chart the way I've got it, but this green line coming down is really where it is. And it broke out. It broke out and above. It looked like it might hold. I had suspected it wouldn't, and it would probably be a head and shoulder. And if it did come up, it might come up to 117 and then pull back because it looks like an M top, like a 1, 2, 3, 4 top with a pullback. Well, if it is a 1, 2, 3, 4 with a pullback and that pullback holds, then this generates a much larger wave 1 potentially, especially if it can get the throwback, which may not seem like a good thing. If you're like a bull and you're like really wanting it to just take off, maybe like, well, I don't want it to drop again. But it has to kind of make a new bottom right here, or else it is going to be very bearish. And if it does make a new, like really bearish, it'll probably drop down to 104 and then maybe even 101, for example, on AMD. It has to kind of make a new bottom right now in order to maintain a bullish momentum. And I actually think that would be a larger wave 1. And then wave 3 is actually pretty darn close. And I had a, I don't see it anymore. I think right here, common fib extension, if it drops to 106 again, which we didn't get quite that low. But the fib extensions were basically coming back up to these gaps that were made in January and during that sell down period from December to January. The reason I'm talking about that, and I'm not looking specifically at AMC and GME's chart right now, is because when you look at the whole, the market on the whole, and you look at what's going on, that like false breakout, quote unquote, seemed to happen almost universally. FANG, which is oil industry, same deal. It had 2 moves above the creeks, and both of the times it's kind of failed to advance. Now, there's an earnings week this week for a lot of stocks, so you're seeing maybe a setup for earnings, and that could make or break perhaps some of these tickers. You know, we don't have a guarantee that all the charts are going to do the same thing ever. That's not a thing. But the way it was set up was really interesting, I thought, because it was like everything was kind of turning back up. It was back to resistance, but it looked weak. And I remember, you can probably go quote me on it at this point, I remember saying like everything kind of at resistance, but it looks like it needs a backup. And so then it has this big, deep backup, and there seems to be like a universal kind of like, uh-oh moment where everybody's like, oh no, it's backing up. And they all had these kind of false pushes over resistance. And AMC is no different. It did the same thing. It pushed up high, and when I went back and looked at it, if you look at the widening, it actually has a double push against the widening that happened to start again around December. So what we're experiencing on AMC at times feels very isolated from the rest of the market, but it's really not in this case. I think almost the whole market is doing the same thing, which is you have a big, we can call it a Santa rally if you want, but you have an early December rally after elections that's kind of followed by a longer sell-off period. So that pump is followed by a dump. Really what you're looking at now is whether or not it's going to sustain. And when I go to look at something like IWM, I find it to be kind of interesting to compare the current top to the top that happened in 2021. And I think this is probably the comparison that a lot of people are making, especially like people that are really into technicals, because it looks very similar with regard to how like the RSI is set up, so on and so forth, and where those drops happen to correlate with RSI bottoms, like on the big time frames. We're talking about like weekly and daily. And it certainly looks a whole lot like the previous top. So you're thinking, well, that's not good, right? Yes and no, because last time this happened, we had a major breakout from the COVID drops, and that was in 2020. And if you look at where, for example, the small caps came back to, they actually came back to the floor, the 2020s floor, and then they come back up again. So unless this is what we would call like caddy or distribution or a phase B top or something like that, where you're going to have to come back and make a spring, unless you're going to come back and test that liquidity that we were at for a really long time. I mean, we were there from 2017 through 2020. So at least a few years. Unless you're going to do that, the ceiling is no longer at like 166. It's actually at 200. And 200 has been a number that's been pretty easy to identify as contested since we broke low into this lower wave. So long time ago, not that long ago, but it was probably like 4 or 5 months ago now, we did the wave analysis on IWM, and we talked about how there was very likely it was going to go to a pullback period, maybe going into the middle of the year, this year, but that we should see perhaps some pushes to the upside, some final pushes just to make sure that we're going to advance. Technically, we did push above. So there's no like requirement of checkboxing here that has to say you have to go back up. So I'm coming to a point here. My point is that even though the market looks kind of like a big head fake happened and we're going to just now take a market dive and sell off, I'm finding it to be very interesting that most stocks were already kind of in a bottoming formation when they did that head fake. As in, like, there was sell-off, but look how low it came already. You know, so our RSI, when we drop down to, for example, on small caps, when this is the Russell 2000, when it's the IWM ETF for it, but when it dropped down to 218, it was already over. It was like tapping oversold on the daily. It was lower than it was back when it was 190 in April 2024. And previous to that, the only other time we had this kind of bottoming action was before the bigger rally in 2023. So it's very odd to me. If you're going into a bearish cycle, I suppose you could argue that it could be down here for quite a while, just like it happened to be again in 2021, a downward cycle for quite a while. Maybe you're not going to go really low, but maybe you trade between 200 and probably 230, you know, for an extended period of time. That's a possibility. But if that were the case, then I'd have to look at this and say, I think it's a giant cup and handle. And this is actually a technically good one because this lasted for years. It came back up to the top, and a handle would not drop below 200, which is the 50% marker, which is where you would expect it to go. So if it is a cup and handle, then what we would really be experiencing is a handle for however long it needs to take until the breakout. And then the expectation would be that this would go back up and make new all-time highs. Now, again, is that guaranteed here? No. But a handle will be a really good way to keep the stock market kind of afloat, let there be kind of a changing of the positions and all that without actually having like a full-on bearish market that's doing some kind of crazy drop and reversal. I think the idea of a market crash may be a little bit overblown here because I bought the puts for 200 for IWM, and I'm looking again at things like AMC, I'm looking at AMD, I'm looking at even like FANG or whatever in GME, and these are just the ones on the top here, not to mention all the other ones we've looked at. And again, they all have the same, in my opinion, they all have the same kind of feeling, which is you were in a kind of bottoming action that was trying to reverse and then it failed to reverse. But none of the indicators flipped completely. And all of them are still kind of like teetering on really bottoms. And so even though, yes, it's true that you had this kind of false breakout in the market on the whole, and then there was like a rug pull that happened, and all of them, almost all the stocks that we watched had the same thing universally. AMC and GME, of course, included in that, where they had these apparent, especially like looking at GME right now, had these apparent like moves to try to break out of a trend, right? And then they're backing up. But I got to be like careful because I don't think it's as black and white as it may look. If you're going into a bottom and you get an early sign of reversal and then it fails, yes, you could have potentially a bear market on your hands where it's going to continue to sell off. And we've seen it happen where those indicators have like been overblown for a year, you know, during massive sell down periods. But if the ceiling, as we were kind of expecting, and everything's coming back to like this sort of floor area, if IWM, which is your small caps, is heading towards maybe an amount of like 200, you know, at worst, there's a gap at like 212, for example. So 200 is not that far off. It's not. if it's coming down to a place where it's still healthy and it's still potentially very bullish, it's just a 50% retrace on a massive move, it's really not wise to just write it off and say it's going to be just like 2021. I'm not saying any of you guys are saying that, but I've been reading a lot this weekend, little articles here and there, and it's like kind of, I think it's a mixed bag. I don't think it's as straightforward as, oh, we're bearish, all of a sudden. Yes, there were breakdowns. I agree. But I'm not sure that the market really wants to rug pull completely. The value that we've built over the last few years doesn't need to be completely lost. It wouldn't really make any sense for it to be completely lost. So even if you're looking at the Fed and you're looking at interest rate cuts and all that stuff, all of that would just be considered like setbacks, sort of to go on a pause, not like, oh, now our economy's ruined or something or whatever. So I just want to kind of like clear the air there and just say like I'm kind of the opinion that what we're experiencing is more of a bear trap than a bull trap that might flip into a bull trap. It's kind of confusing. Before actually kind of maintaining like a more sideways downward movement. So what I mean is that this initial pull down that we're getting kind of across the market after some red and then a push up, I know it's a bunch of back and forth on my part when I'm saying it verbally. It just doesn't look like it just still looks like a bottom to me. Like it still looks like a period where, yes, you might come down and make a new low, but I can't see how that could continue indefinitely. Not in like a really harsh way. And I've been looking at IWM specifically because it is the small cap ETF that AMC is part of. It would be considered a small cap, right? So it's a good barometer for maybe how people are buying and selling those stocks, as is GME, right? And this is a wave that's got an S-curve in it. I think the S-curve is done. I had said 252. I think it only ever came up to like 244, right? Just slightly above the previous all-time high, almost 245. And that's as far as it went. So I was off by a couple dollars. I'm, $5 or $6, whatever it is. I'm not going to beat myself up over it that it didn't kind of make it there. But that is also an M cross. And so when we talk about these things, what happened is that we built a resistance here in April down through really quite a while, and we never really left officially until September. That's really where the jump officially happens. We found the support again there, and then we took off again. So this is really just a large cross up over a major creek, which goes back to the previous all-time high. You can kind of chart it backwards that way if you want. And if this were to drop straight down as the crow flies right now to it, it would still only come to like 197. I don't think, again, when you look at the previous highs, that it's necessary to perhaps to come that low, because we've already checked that area out extensively from December 2023 till August 2024. However, this is the caveat, right? I went back and I checked, and there are some levels that were not checked. Like there are levels that we didn't seem to find more or less official support on. 200 is kind of a given one because it would be easy to come back and hit that and kind of do a throwback, and it would technically be a higher low because of that dip that was made in August, weirdly enough. It'd still be making a higher low, and it would be basically a creek jump test and a backup to the previous top. So 200 is a really easy target to find. The other ones that I found were 207.50. I think this is a likely area based on a large number of things. And a lot of it has to do with the breakdown that happened in 2020 to 2021, really the breakdown being in late 2021 going into 2022. That region right there, when you look at where we are currently, did not get a proper back test. We checked two levels coming out, neither of which was 207.50, but they were sort of the key levels when we were entering and exiting the range. It was between 207.50 on my chart and like 209.70, where we have the most interaction. And there is some of that here, don't get me wrong, but a lot of the movement that took place, as you can see, is gaps. So there's like a big gap here, gap, gap, gap. So it's like 1, 2, 3, 4, 5, 6 gaps in this little area right here. And that tells me that there's a liquidity issue there. And it can mean a number of things, but I find that to be highly irregular, that there's that many gaps in that little pocket right here. So I think that that is the particular area of interest for the market. And if you look at where the movement currently is and where it bounced off of, it basically came right down to that last known gap, which is around 212 or whatever. And that was the one I was thinking when we came down, we might actually go all the way there. We didn't quite get there. Guess what? This is sort of like a similar pattern and similar idea to what we're seeing across the board, because a lot of the stocks kind of left open a little bit below them in this last push up. And so they have room to come back down. AMC had room to come back to 330 or 323. It actually was triangulating 323. The major creek that it needs to hit is right down there at 330, which is where really right below where the gap is. And you can see on this chart that I've got, it's in the right space. Now, we were kind of charting these head and shoulder motions, and I was saying, you know, basically, if it shoulders up here to 350, which seemed really likely for Friday, I was like, I might even sit there on Friday, then you either have one of two options. You either reject it and you head down low towards the gap, which is what happened, or you hold above. And it did make that move, right? But it was a fake out, and it didn't hold above. And so you're like, nope, not buying in on that. And I didn't, because it's like, it's not holding, right? So you don't want to jump the gun. It kind of dropped through immediately. And I think that candle, I want to say on like the 20 or the 30 minute, doesn't even like hold any weight up here at all. But really it stops at 348, which is below the trend anyways. So the whole thing was a picture of like, all right, we're going to make a nosedive, so we're going to pump it and then dump it and do that double flush motion where it goes up first, then down, and gets the liquidity from the sellers and drives the price through resistance, which was at 340. So I'm saying this as sort of a matter of fact that when you look at the big picture, that really is coming very close to where that creek is and where it should be. And again, I look at things like this as really, really, really important, because this particular cross up right here is like a defining feature of the wave analysis that I look for, because I'm looking at where does it want to go after if it breaks down, and it's always going to be the middle of this wave, because that's where the defining resistance is. The rest of this could be just thought of as distribution if you want. And you can see it in the RSI, which peaks actually back here February 11th, and really is kind of weakening as it goes all the way into the top ever since then, because it's building out a wave up, and then the rest of this is all weakness. The volume was dropping. We talked about that a lot, and it was probably going to have a pullback. At that point, you're looking at fibs and you're looking at likely places to come back to, so on and so forth. And there's a lot of other things we could talk about with the trends and whatnot, but I'm seeing kind of a similar pattern all around. And what I think we're missing is if we're going to go down really low at any point, we're missing like a higher distribution, because there's too much, in my opinion, there's like too much selling pressure. I would want to see this, and I know it sounds a little contradictory, because you're like, well, sellers can just sell if they want to sell. They don't have to qualify it. They can just keep selling it down. Yeah, yes and no. If the market turns up right here too quickly, you could end up with something that looks a lot more bullish, because technically this could be thought of as like a divergent bottom, and it could just rocket and rally. And I think it's possible that happens, and that this was like a false breakout, but it was really just a push of resistance that's then backing up, trying to find a new bottom and then go again. But, and that's kind of what I'm arguing, right? I've been talking about it for like 20 minutes now, is that I think that this is still a bottoming action. There is still lower targets in mind, and yet I don't think it's a market crash. So you'd kind of have to then imagine, like, all right, if it's interested in going lower, is it a dangling carrot, right? Is it showing us targets that we think bears want? because it's dangling it in front of the bears to kind of get those selling or get those kind of bears on board with that, and then we're going to reverse hard, right? Or vice versa. And I think that there's an element of maybe both here, because I was looking at the charts and most of them seem like they would do very well to today or tomorrow have a bit of a reversal pattern. And some of them, I think, rally, some won't. But I do think this would be a lot stronger. For example, on this particular chart, if we saw that kind of breakdown and then the reversal happened later, right? And this builds out a much larger possibility of both, bull side and bear side. It delays a little bit, maybe what might be considered the inevitable. But it's just like we're missing like something else here. I think what would be sufficient would be a drop down to 209, for example. Then it rally up to previous tops at like 226, which would break a creek, right? And at that point, you have a lot of options. And I think that gives us, it's almost the same thing, I know. You're kind of like, well, you got to pick one, right? Yes and no. Because right now, I'm not really concerned about the super long term. I think if, for example, IWM came down to 212, which is not that far away, it's a stone's throw away, okay, then it would be enough. And even though that's a breakdown of like the daily 180, for example, and that's why I'm kind of thinking right now that level is going to be like 220. And that could look very bearish. I think that gives you enough room to kind of pump it, and then you could see what happens. Like I would then come back and look at this and do a new analysis and see if, did it get overbought? If it gets overbought by the time it's back up to 220, okay, then I think we're probably still in a bearish cycle. We're probably going to see it have a significant sell down, maybe to 200 at that point. It's kind of just missing that wave down, and it would do well to define what this bottom actually is. Is it like a local bottom or whatnot? It seems a bit more unlikely to me that this just drops through and comes all the way down, and it's just already at a place where it's like, I don't know, pretty close to oversold. And I don't think that the market, volume-wise, the selling volume doesn't really make me think that it's going to just drop. It's not that high. Locally, it looks like a lot, but it's really not yet. It's still pretty weak on the whole compared to everything else. If you were expecting this to have like a massive flush, there should be like way more volume. So that would be defined as like what's going on here in the sell-offs and whatnot on the tops. Anyways, I am a little back and forth about it, I know. But my point being is that I think that this isn't exactly going to be some kind of market crash. I think what we're going to see is probably some serious reversals starting this week and next that appear to be going back to the upside. And that'll be kind of a last check for bulls and bears to see what the market thinks about it. So I feel like this is a liquidity thing. I don't think this is the crash right here. I think we're very likely going to get another push up market wide before anything else happens. But I do think that it would do well to come back down, especially I think AMC would do well to get a little bit lower. You never know. You know, it could break out early. And so the levels that I've got are the right levels. I'm not concerned about them. Timing is always a question. I would have expected it to kind of pump here and then drop low. And then maybe tomorrow, you know, turnaround Tuesday has that famous kind of catchphrase. But maybe tomorrow, maybe even somewhat midday today, which is where we're at, you might start seeing some of that turn back around if it kind of comes down and bounces. And then I believe that we're going to kind of get to that point of, all right, we're done. We're ready to take it up. That's really where the analysis is going to flip and become more about maybe a little more reactive than I'd like, but more about kind of gauging how far the market can go on the liquidity that it has and seeing where your operators kind of stall it out, whether it can continue or not, because it is possible that this is actually a bottom. I mean, when you look at, it seems unlikely to me because I'm worried about, obviously, it getting overbought too quickly. But it certainly looks like it could be. The reason that it's so easy to doubt that is because of what happened here. But there's some pretty significant differences. Volume being tantamount a big part of why I'm like, I don't know. 2021 November, dropping after that, going into like a bear cycle, looks really similar. It's similar levels, but everything's slightly higher and volume is more elevated in some of the buy-ups. And then there's a really weird lack of selling, like heavy versime selling. It feels significantly lighter than the sell-offs that we had that marked the market top in 2021. And it doesn't seem like it would warrant a crash to like some ridiculous low. It really looks like a backup to maybe at most the previous tops. And even with that, I'm like, yeah, but this is still looking pretty good. So I'm seeing, on the whole, a little bit of more downside potential. We might get a little pump before the dump. But then I think we're going to see what happens. And I don't think it's going to be maybe the easiest thing to read. Nvidia having its earnings this week. Nobody's disillusioned about that. It's going to make a big impact on the market. And I went and checked out Nvidia just to see what was going on. A lot of people are thinking it's way overdone. It's going to come down more. It's not really that bad looking. It really looks like it could turn tail and go back the other way and just start a new uptrend anytime. Because, again, like it's technically still undervalued, even though it's rallied so much. Based on what everyone's pricing in on this thing, like for the analytics, it's not there yet in terms of like value. So it's actually very cheap, believe it or not. Even though it rallied to like 1,000 and then had a split, it's still like relatively cheap if you consider like all the things that they've got going on. What I suppose I would say with the indicators is that the 200 SMA has cropped above the 180 EMA. And when that happens, you only get one of two things, which is pretty straightforward. And I've looked back at it and checked, and it's always the same case. One is that you get a dip beneath and then a rally above that's like a spring action. Pretty straightforward. You basically jump a creek and find support and then continue. The other is a breakdown. Now, I know, again, I'm looking back at what happened in 2021. And again, that's very interesting because that's the same thing you're seeing market-wide. It's like everybody's saying, well, it looks like we're going to endure like a new market crash. It's possible. And this is partially why, because everything has this kind of same vibe as like the 2021 setup. I was just talking about that on IWM. I think the same will probably be said true about the S&P and all that. But I don't think the crash, if it does crash, is going to be as severe. That's what I've been trying to say. So this particular area is an example where it crossed up and over and went into a bear mode. And you can see that it didn't cross backwards until it broke out. So these are really good indications of, and that might be the 90. Let me double check. No, that's the 200 SMA, which is orange. And then the EMA is the blue, and that's the 180. So this is a pretty darn good indicator for Nvidia. It's been a very like concise indicator of possible reversals. And where we are now looks a lot like where we were here, where there's a push up, right? That's happening on a little bit of weakness. It's failing to jump that prevailing creek that was there at the time. And then it's also flipped these indicators. And you're seeing kind of like I would just say like a head fake back up to the previous support, which was lost in January 2022. That rally then results in a pretty massive dump. But that didn't happen on earnings last time. It happened afterwards. And it was, again, almost a month later when that actually happened. When we look at where we are now, there's only been one test of, let me see if I can frame it both. There's only been one test of that cross, which is right on the money, like right where it first crossed down. That would be probably more, again, associated with what was going on in March 11th, 2022. Again, looking at that, you would say, well, shouldn't it still have a rally in store? Well, yeah. Weirdly, it does have a rally after it breaks low, and you can see the buy-in. And it's mostly in the bottom. Even though this starts selling high, almost all that volume is in this bottom area around 124, which makes sense because it's testing some pretty major moving averages. This is what's missing though, is we're missing an actual like head fake. It's not here. I checked and double checked, and it's just not here. It doesn't exist on Nvidia. Nvidia did not fake out. It just tapped the top and then backed up a little, which leads me to believe it's very possible that this has left room for that to happen. So again, even though like, yeah, it looks like it could fall off a cliff right here, especially if it drops back down through 125, I don't think I would become very, very bearish on something like Nvidia unless it comes back down through 125 and fails to hold this region right here. Then I'd be like, sure, let's be bearish on Nvidia. In the meantime, I think we're missing that push. So I'm not convinced just yet. Now, could it be that we gap down and we gap down during earnings and then rally back up and that's the end of it? Sure. You would have to play knowing that the risk is there. But when I look at it, I'm like, meh. It looks like, again, we had an advancement. It didn't quite make the push. Some of them seem to go too far and then sell off back through their supports. Others were just sort of right there, and Nvidia is just right there. It's unlike the other in that it doesn't seem to have that massive push above. So I would venture, without trying to be way too predictive here, I would venture it's missing that rally. And again, I don't like this idea of being way too comparative between like every stock in the market because they're not all the same. But it is interesting to me that this is sitting now on the 4-hour. It's sitting at a place where it could potentially easily find support if it comes back above 136. And I think that previously when we've had that flip, right, it's been in contention zone. But like back here, for example, we had a very similar flip. It didn't hold, right, in this particular example. But we had a really similar flip in September 2024, and it still pushed above. I could just definitely see this needing to interact more with this top and definitely needing to push potentially this resistance before anything else happens. So when I look at it, I'm not going to be making, again, any other kind of huge prediction on this, but I could certainly see this having a very positive pump into earnings. And then potentially, you know, again, the we'll see moment before maybe coming back down. And I think that might take a few days, it may take a week. And this is where I expect there to be a lot more uncertainty in the market and more difficulty for bulls to kind of analyze where it's going to go. So that's my gentle, soft prediction for Nvidia. I don't think I'm going to play Nvidia. I don't necessarily think this is going to, again, be like 2021, but I could see this going into kind of a low breakdown period that ultimately comes back to achieve a particular goal, right? And at this point, I'm looking backwards and I'm thinking that, well, it's probably going to be heading towards this creek again. And then if you consider where that would take you, the most logical explanation is, again, looking at that August 2024 area. Like, where was that? Why was that there? Was that a weakness, like a sign of weakness early on in the market right here that suggested we're going to go lower? Maybe, you know, and that's the same thing you see on IWM in that August sell-off. And I think that that's going to kind of be the story for me for the next few weeks is if we make another push here to the upside of any kind, does that then give us enough room to kind of head back down towards whatever that goal might be? And is that ultimately kind of this massive bearish downturn, or are we just going to see it kind of come back and find a resting place? You know, for Nvidia, that could be like $100, maybe down to like 95. If it doesn't, again, hold certain levels, like it has to show the breakdown. It hasn't done that yet. So it's not possible for me to say, oh, it's going to do that. No, it hasn't done it yet. But I can certainly see the setup there. It seems pretty darn clear when you look at the trends and you look at where all these intersections are. It's definitely there as a possibility that this breaks down and heads down to retest that top. Is that the end all be all? No, because again, big picture wise, when we go back, we'll see that that's probably going to be the area that we actually hold like a new support. And it's really not a huge pullback in the grand scheme of things. Now, some folks will probably look at this and say I'm being way too small-minded, right? It could come way back down, before it goes again, because 2021 top is actually over here at like 35, right? So why not go all the way down to 35, or why not go down to these weekly moving averages? Well, it may, but if you look at where we are, and if we were to spend the next month or so kind of chopping over here, I think it's very likely directionally that these moving averages are going to be significantly higher if we don't make a quick breakdown. And so when I look at it, I'm like, yeah, they're going to probably be in the right spot as long as we're not like dropping off the face of the earth. We're probably going to be in the right spot going into like really June, July, right? That sounds familiar to me because we've been talking about that June move back to the upside. So yeah, we may be in a few months of downside in the market, but it's not like, in my opinion, it's not going to be some massive dump if it happens. And the other option here is really straightforward, really straightforward, which is that it makes the jump and it doesn't come back through. And if it can make the jump and it makes an advancement here, I'm going to perk my ears up a little bit. If it jumps above recent all-time highs and then it holds at 138, Nvidia is likely going to be pretty bullish. Like there's a good chance then it's going to try again and just continue. Why would you think that's even possible here? Well, previously when we rallied from the 50 on RSI, we were back at $41, and it continued to rally even on weakness, and this RSI has chilled off. It looks kind of bearish if you just think about it that way, because you're like, oh, it's been rallying and the RSI is coming down. Yeah, but it's also chilled off. So, I mean, it's cooled off quite a bit. One good pullback, maybe succinctly here, even at earnings, if it dropped down and then went up, I might be more bullish about that because you're kind of flushing out, weakness there by doing that. So I definitely would keep your eyes open on this, keep your eyes open at that top level. And I think it's very possible that this could be a bit of a fake out for bears in the end. So even though, yeah, this is probably what most people are seeing. Most people are seeing the continuity with 2020. Most people are seeing that as a possibility, and I think it's a real possibility. It has to kind of make certain moves first. And then also, it looks like there's some stuff missing here. Like, I still think that on the daily time frame, maybe on 4 hour, on a lot of these charts, it still looked like it could be in a bottoming action. We're just kind of dancing around. So we'll see. We're very close to an answer anyways. And I think by maybe a week or two from now, we'll probably have some really clear direction. I don't know how anyone could look at this right now and say for sure that they know which way the market's going to go. I just don't know how you could do that because there's certainly like weaknesses here in that how low this came compared to where it took off from in October. It's like came below. There's certainly things there that look like maybe what we call an SOW, but there's high volume too. And it's like, that could just be a spring. It's really hard for me to judge it that quickly. And because it didn't make another head fake here, I'd have to wait for it to break down under 125, for example, right? And I think that's very similar, universally here. We're kind of missing a little bit of downside and some pushes up, really, before any kind of definite dropping would happen, in my opinion. So looking at AMC today and just kind of coming to a conclusion here, this will probably be a shorter stream today. I think it's a similar story. You had this kind of fake out move to the upside. It came back up, hit a previous top. It looks like an inverse head and shoulder setup on the big picture. So even though right here it looks like head and shoulder down, I just think about it like a wind up and unwinding of positions. And if you take it to the next level and you look at it a little bit larger scale, you can actually see that this was the previous top from January 17th. So this could easily be a head and shoulder, and it did hit it like pretty precisely. right? So what would a head and shoulder target give you here if you were to take it back up? I'm not going to do it exactly, but it's roughly 50% of the head. It's like 51%. So I'm just going to kind of eyeball 50%. At most, this would take you to like 426, which is quite nice. It's really right where we would have expected it to be anyways. Looking backwards at what we have previously, this is that range that we've associated with this pullback for quite a while. And then it's just back to business, you know. So the setup itself might look short term, like a little bit more bearish. I think medium term, it still looks kind of bullish to me. Like I think we're still waiting for an uptick here, a decent one. But then I don't think longer term, like a bit longer term than that, we're maybe going to escape some of these bigger pullbacks that need to happen in the market. So, does that make sense? So I'm not thinking that GME earnings is going to be horrible. I think it's going to be pretty bullish. But I think that you're going to have a short-lived kind of bull run. And I'd be very surprised if we were to rally continuously past 430. And I've been talking about 430 for a while. That's my opinion about it. I think 430 gives us everything we need to get. I don't necessarily agree with the idea. We've explored it some, but the idea that we come all the way up to like 520. What if it happens? Well, then it happens. We'll deal with it when it happens. I'm not a big proponent of that right now. Because I think that it doesn't need to go that high to kind of accomplish what would be in light here of like what we're trying to accomplish, which is really like a retest of the previous bottom. And you can see what I mean. It's not like you don't need to come all the way up here to do that. There is some evidence that it might happen, and we've talked through that. I think last week we went through it and looked at it. There's some evidence there that it could happen. One of the things that I would think about is this guy. This is a bit long-winded. This goes all the way up to like 485. And then I think at the same time, like that's where it intersects that line. At the same time, it could see it maybe going up further. If it continued to rally into like March or something, like significantly into March, I think it could come up to that top. There's a lot of times the final ascending marker, and it's a question mark, but a lot of times that final ascending marker is a triangulation. But this is fairly straightforward on AMC. So I'm thinking that it's not bearish. I'm thinking it's probably pretty bullish into earnings. I think we've got the pullback that we were waiting for. I'm waiting to kind of find my own position again, because I told you guys what I was doing, and I was right to do it, and I'm happy I did it, which was to exit up here in the 360 area and wait for a new entry. And then after that point in time, I was going to wait until potentially like a bottoms forms into earning, which could be today, could be tomorrow, could be the day after, because we don't really know what the setup is going to do today. And we'll have to wait it out and see. But it's close. I think it would do well to drop again, just to get that gap fill and then just go. After that point, we're really looking at a kind of a wave 3 setup here as well. So we could do that if you want to do that too. Could it be a wave 5? Yes, but the thing is, and this is interesting, right, with Elliott wave, it works on the principle of iterations. So if you look at the first wave here, it is a wave 1, potentially an ABC correction, or potentially a 1, 2, 3. Well, the 3 went up to near the 2618 value, or pretty close to it. It spent a lot of time around the 1618, which was 350. That's pretty common for the wave 3. What's also common is that wave 5 oftentimes ends up being kind of an extension above wave 3 and about the same amount as wave 1. And there's different ways of measuring it. It's not like all the same. So one way would be like, oh, it's only going to be wave 1. Well, that basically leads to a breakdown. It doesn't even lead to a new high. So that doesn't really make sense. That's just like us not coming above 358 again, which is the area that I'm like most concerned about, is like 358. I think if you jump 358 with some strength, you're probably going to go all the way up. The other is just kind of extending it above, and it goes right to the 410 gap. So could this be like a wave 5 extension that goes to, on a smaller scale, it goes to the you know, 410 area or 430 area. Yeah. Now, does that mean it's over? Well, potentially. You know, this is kind of the same move we made back here. If you look carefully, you'll see this after the double bottom, we made an advancement, backed up really deep, then we made a bigger move, backed up again, and we made a smaller move. And it's not the best example. This one's pretty close to breaking, I think, the rules. You're not supposed to come back below wave 1, and it did. But maybe that was the weakness, right? And that happened in, and we broke down. We actually dropped right off that wave 1 level, which was at 480s. So you could see how there's some similarity there in this motion. Maybe with a little bit more strength if we don't come all the way back down to 320 right now or 323. If we kind of hold a little bit stronger, there's no telling. It could dump still at earnings. It props it up. It could still drop and hit that marker and open at 323 or something. But certainly it looks almost the same in that regard. So I could definitely see this making an advancement and then sliding backwards pretty quickly from like that $4 level and just not really advancing very far. I think it's more likely, given the situation that we're in, that we're going to spend some more time at 4. And it doesn't seem to matter what we've built out here, even in a bullish scenario longer term. It seems like this region would be a little bit more contested this time as opposed to just dropping back through it for a number of reasons, biggest of which being that you would want to trade up here between roughly 377 and 405. I think it's very likely that's the pocket we're going to try. And then again, there's the possibility, you might say, that this could be like a bigger wave 1, so on and so forth, yada, yada, yada. And then it could be more bullish. Not looking for that right now, just looking for the next move. So, do I see it dropping to 186 all of a sudden? Um, 186 does sound like the level that I think it is pretty darn close to the level we had marked off down here. There's one at 230. And then I think this is an older chart because there's a better chart that I have. This one's older. That could be a place we stop at like 220s and build out. But there's another chart that I have somewhere else. Let's see if I can find it real quick. It might have been Nvidia, that Nvidia one. I may have. This is the one, I think. No, it's not. Well, that's not helpful. I don't know where it went. That's not helpful at all. This looks completely different. It's nonsense. This is not it. I know this isn't the one. Because we did a whole diagram about it. Up thrust, down, push up again, coming down. Why does this happen to me? Maybe it is this one and I just cleared out some stuff. Maybe it's just missing the pieces. It doesn't look right to me, but yep, this isn't the one. I'll have to find it. I don't know where it went. It's not these neither of these are the right chart, so I'm not sure. Maybe it didn't save. That's possible. I closed TradingView last week over the weekend, so it's possible that chart never saved, which would be really bummer. I thought it's supposed to auto save, so I don't know why it would do that, but yeah, it's not. That doesn't look right to me. So yeah, I don't know. Well, I don't want to have to rebuild it right this second, so I'm not going to. But I'll try to doodle it really quick. So basically, how did I do that? There's a trend here that's kind of at play. And it's like a widening. And then I want to say it was like the triangulation was like here and then down and then over and then down again. And then alternatively, it was here and then breaking out. But I'm kind of annoyed. Let me see if maybe I can go back. I'll try to do it this afternoon. Try to go back and see if I can find it, because none of these are right. None of them are the ones I was looking for. But anywho, when and if it came down, it would probably break down here and then head into May to June area. And that's been in contention for a while. I think there's been a lot of evidence that we go down that low. And that does bottom out pretty low. I mean, if you take a look at big picture trends and other things, yeah, I could hit like 220s and that be done, just barely dip below. But there's also certainly a possibility to come lower, and some of them are very low. Like if you took until June, for example, that's hovering right around 2s, you could be below 2. So I don't doubt it could go to 180, but this unfortunately isn't the chart that I built, so I think it got deleted, y'all. That really bums me out. This is like an older save or something. Yeah, because this doesn't look right to me. This is the intersection. I think we were looking at it like 220 right there. Kind of a repeat of last April into May, which is interesting. But that's what it would probably look like if it did do that. The reason I wanted that chart is I think it had better triangulations for timing, but I can't see it right now, so no. I think what we're going to experience right now, we're going to get an up thrust. When you look at it right here on the hourly, this is the M cross up, this is the M down, all the way over. Certainly looks like it could just take off. No one would doubt it. If it did, they'd be like, okay. But I think what we're likely going to experience is the rally, which becomes like the hook. So it doesn't completely get oversold, for example, on the hourly. Instead, it pushes up, and then we drive the price low. And this is like the true bottom, the hooking action. It's still going to be divergent over time, you know, but this would be the way I would see it more likely. Anyways, I can't draw it right. I don't know. Lost my bearings, I guess, because my chart disappeared. Anywho. Other few people probably look at this and think, well, I mean, if it jumps up above and it just holds here, even if it holds higher, it doesn't need to go low. And we talked about it last week, about the possibility of a double move, one being now, one being at GME earnings. That there's two moves that happen. And again, I don't have it on the chart because this silly chart's not the right one. I'll go back and look maybe at the video from Friday and see if I can find out where it was. But anywho, what that was basically like you pump up now and then there's another pump early March going into GME earnings, which is over here on the 26th. So there's like a double move that could happen. And I think it's possible. But again, I don't necessarily think it means that it has to be like a moonshot, you know what I mean? Like every move doesn't have to be the same. I think it would be likely that this would go up and then possibly, you know, if it does rise again, that's where we could look at that $5 level, you know, and then we would see what happens after that. So locally, different story than big picture. I think we're going to see a rally. Don't think it's going to be the end-all be-all kind of rally. I think it's very possible that we could have a double in our, you know, double move kind of here where this comes over sideways and then breaks out again later and goes to like 5 or something. But that still doesn't mean, in my opinion, that it's going to run. Like, I think it's very possible it doesn't still. And I'd be concerned also about any kind of news of negative effect. Let's put it that way. For, don't say the D word, right? Of negative effect on AMC. So I'm sorry about the chart thing, but I don't know where it is. So I feel like really silly. It's just not there. This is not the one we were working on. Not really on Friday, because I had it pretty clearly like where I wanted it, and I'm not seeing it now. So today I'm watching, just to sort of summarize here, watching this locally on trends down and stuff like that. Pretty easy to do. But the way that this was built out with the double up thrust shouldn't be ignored, because both of those moves, and I was saying on the 30-minute, never closed above that line. Both of those would be considered UTs, right, which define kind of what we call the cat ears, and those would be the easiest ones to draw out. And you can see, like, if it were to go down and not break out by earnings, it would be around 330, as long as it doesn't break out, right? Could go as low as 320s, but there's plenty of space here. So I don't expect it to break out today, not even necessarily tomorrow. I think what would make the most sense would be to kind of get a little more red today, drop down and get that 330, maybe get a rally tomorrow, and then from that point forward, we would have to see what happens. But I think that's where you'd want to see some kind of like a iterative bottom maybe form, where it like chops and does the same thing over and over again, going down into earnings. That would be really bullish. If it just continued to rally and jump a creek, you can make different claims tomorrow, but that's tomorrow. So this would probably be a good place, again, for shares. I don't know about what the options chain looks like right this second. I don't think it's ready yet until it hits that 330. And then maybe we get a fairly succinct rally. The first move probably only goes to like 340s, and that would be the one that would check this guy. And then the second move would be after earnings, more than likely, if it's going to happen. Yeah, that seems about right. GME, different stock, right? But similar patterning in some ways. So GME has a little bit of a different potential here. So just like AMC, we talked about how there was and this one's saved, so I don't know what happened. There was a higher head and shoulder that could be a rally to 32, and then it backs up to near 29 or so, and then jumps a creek later near earnings. There's another option here, which is a little different, which is to drive the price up in order to sell back down and just not move as far. It's really simple. If you're going to have a 2 or 3 day rally for AMC going into like a Friday, you could just look at volume to tell you what's happening. And if you hop this local, I don't know if I call it a creek just yet, but it is the most outstanding price position. If you hop that around 27.60, and you just did like a 50-50 jump above, you probably could get up to like 29, maybe even 29.99 kind of thing, Thursday or Friday, and then really just start selling back down going into GME earnings. And it just would not surprise me if we're at 24 nearer that time, as opposed to being set up high. And I think that it just depends on what we see locally right here. If it holds above with some strength, I think we're going to go ahead and head up. And if it doesn't, and it just kind of bleeds back through, I'd have to just sort of assume that we're going to head back down for now. And it's got little more time baked into it because earnings for GME is like a ways off. It's a month away still. So I don't necessarily think it has to rally extensively. And I think AMC could see a stronger push to the upside and then bleed a little more sideways while GME is coming down. And then when GME has a big move, AMC has a smaller move, if that makes sense. So kind of vice versa. That's happened a few times. So, but yeah, I don't know. Big pictures, nothing's really changed. I just wanted to address it today because it's really red in the market. America economy is 38 trillion. The rest of the world needing AI is 127. Nvidia must fill the AI void. Nvidia is going much higher. Yeah. I mean, we didn't really disagree about that. I said it seemed very likely that it could go again. I'm just looking at if it's going to take time to do a longer backup, where would it go? Which is sort of the word on the news right now is like we're going to go into a sideways downward consolidation or something, or a market crash period. I don't necessarily think it's a crash, but I think that it does look like, sure, there's a little bit more room down. If you want to get it, we can get it. May require a little up first, a little more. For some, not all. They're not all equal, you know. And that's what I was talking about over here, is like I certainly could see why the argument is what it is. But I could also, you know, see that it's not really that bad. It doesn't look terrible to me. I'll spend the first 20 minutes of here talking about it. I think that's what you were responding to. So talking about Nvidia. So I'm bullish on Nvidia earnings. I'm not so bullish on short term unless it makes certain moves. And it's not a stock that I would want to like bet it all on right now. So I think the market is scary today. Yeah. Do you see AMC high? Very high. High. Very high. Can you reword that? And you put NOIT. High, not very high. High or... I don't know what you're saying. Or not going very high. It's okay. I don't know. You know, it depends on a lot of things. So, like we were talking about last week, the thing about AMC right now is that it seems like the ceiling's not that high for me. Like I've been talking about $4. And the main reason for that is that $4 is the previous floor. So if you don't break 4, even if you're just chopping along it you could chop along it for a month, right? Going into GME earnings, for example, you don't have to just jump it. If you don't break it, I could see 430 being like a bigger push, like an up thrust, and then just chilling out underneath it or on it. And then if you do hold 4 and you jump over like 4.5 or something like that, by the time we get there, you could definitely see that gap fill up at 5. The thing is that it doesn't by itself. It is a creek jump at that point, but it doesn't by itself give you everything you need. And we've seen plenty of times where AMC's done some really high pushes that just get rug pulled. So I see it going decently far right now to try to get back up. If I had to make a perfect, like, hey, here's exactly what I think is going to happen kind of thing. Like I said, I think it's going to push up again, and it's going to go to near the 430, but I think it's going to do it on weakness, meaning that if I have to pick, again, an option, I'd say that it's going to do it with less strength. And it may be that it takes a few extra days. I don't know for sure. It could end up not moving till next Monday. We don't know. But the the overall picture would be up first. I think we're going to go back up and test the 4s. I think we'll do that, and RSI will look kind of meh, like kind of weak when it gets there. Like it will look like a downturn is imminent. And then I think it'll chop for a while. I don't necessarily think it's going to be an immediate rug pull. If it is, okay, but I don't think it necessarily will be. One other thing that we should probably think about before kind of wrapping it up here is that this widening that we've been kind of building, that goes to the very, very, very bottom here, hasn't been fulfilled unless we come down again to about 328 or so, which is another reason why I'm like, man, we could totally hit it, because we might hit that bottom on that trend down here. And if you look at that bigger picture, that becomes like a widening, right? So if it were to move its way up to that point, you could certainly see why then that widening becomes an issue. Like, oh, well, then imagine coming down to March 20th where you're kind of in this region again, you've backed up quite a bit. Now you've got a widening to the upside. Well, that's not exactly super bullish, is it? So I think you can see that on my screen. You see how like almost perfect it is, the way it's set up as like a widening spread here? And where those levels are, they're all right where they should be, which is amazing. But they're basically all on the extensions. They're all on the inverse head and shoulder targets. It's pretty clear that that's a very good possibility. But once you get to that point, then it's like, oh, well, I could certainly see it going again if it kind of chops into March for a while and then holds high and it just trade up high and then breaks out again. Sure. But I could very, very easily see how this could be just a kind of a chop period that then breaks down and then loses this head and shoulder. And I think one of the things we found that was most interesting last week was, I want to say it was January, no, it couldn't have been January. It was November like 11th or something like that. There was a marker, maybe it was back here, this way. Yeah, this is probably the one. And on GME, this points to like $40. This setup does. But on AMC, it actually points low. And it points to a potential like intersection here, which is actually more of like a breakdown. So I was trying to like reason as to why would AMC not go very far if it's already made the move low, which is possible, and it's made a kind of an SOW here. It pretty easily builds itself out, and you can see that that's right around earnings in March 26th. So both would have potential upside there, depending on where you are. And obviously, if you're on top of that, with AMC, it's very different than if you're like, frankly, like right below it. So I'm kind of rebuilding it now. But this is what I was seeing, and I was like, that's really curious, because that sell down would be in the perfect spot here if it does sell down from, let's say, right after earnings or shortly after earnings down to where I said on GME, it comes low right around March 19th. Both could be in a position if you come back to that floor, weirdly enough. Because again, that's the February 7th floor. February 7th floor. If you came back to the same floor, so if both of them run up, right, and let's say GME doesn't go that far, it goes to either 29 or 32, and then you come back down to the floor, let's say you didn't fill the gap completely or something, and you just came back to the February 7th floor. If you did that by earnings and you took that period of sideways, this becomes like a larger double wave, which is sensible. That often happens. And then for AMC, that's a really far distance, like way back down. But what's interesting is that triangulation that came next, for GME, it actually pointed to like $40. It went really high, but it was like up here. So let me show you. It's like right here. So this goes to, yeah, it was like November 11th through January 13th. And it actually goes all the way up to like $42. That's the direction that we were traveling there for GME. But on AMC, looking at that same time period, and if you go back, then November 11th was when, after it made that double bottom, it jumps up here. It's like right there. Clear as mud, right? But that's it. That's the little floor. And then if you look at January, just look at the directional input. Like, which direction is the market heading? Look at January 13th. All that chop going up, that rally would lead you back up. But AMC is all this chop going down. And it turns into kind of a quick inverse head and shoulder that then reverses into a regular head and shoulder again. And it's pretty interesting to think about if you were really going the same direction, right, and you were moving the same way, this actually gives you that indication of like what direction that actually is. This is the 7th right here. So there's a really strong continuity if you look in the right place in terms of like what's the direction that we're actually moving for both of these stocks. Down this way, right? And it does kind of beg the question, do you even get to 4? I mean, I don't know. Maybe it stops short, but I think that for now I'm like, yeah. And then this doesn't rally beyond $4 again. It can be at $3.74 or something like that, maybe. And it adds up because of that trend below. So it's really bizarre how both stocks, if they did move in sync according to their own proportion, one would be in a breakdown mode of like dropping low and then coming up to hook. The other would be in a more of an upthrust mode finally at the end where it comes back up to be sold back down from the top, which hasn't come back up to it yet. So sort of like taking turns. One rallies now, hits a high, and then comes low. That would be AMC. Rallies high, hits a high, comes down low, and then hooks. One does not rally as high now, potentially. It comes back down and then makes a massive rally later. Now you might say, well, why even bother? Why not just do it in 2 steps? You know, I don't know. Maybe they do. And we had talked about that last week. It really just depends on what happens right here for GME. I don't think it's that complex. I'm making it sound like it, but it's not. It's pretty simple. If it can hold above like 29, we should be fine. So, no, I don't. The idea of fractals is not wrong, but the way that people use them is not always the best. I don't really want to go on a rant about that. Let me put it this way. Yeah, I'll stream tomorrow, probably in the morning if I can, because I want to jump out in front of it. I might do 2 streams tomorrow, one in the morning, one in the afternoon, since we're going into earnings. I may try to stream earnings if I can for AMC. So when it comes down to it, the things that people look at in fractals are really what we call like creek jumping here. So I wouldn't look at a fractal as a up-down kind of calculation as much as I would, is it making the appropriate jumps that it needs to make? Because when the market rallies and it runs, and for AMC and maybe for GME to some degree, but for AMC specifically, when it runs, it does something that looks more like a change of character in terms of how it jumps the creeks. It makes the higher pass on, like, for example, we call it like the M cross, where it goes up, down, up again. It jumps over there instead of getting stuck, or instead of doing an up thrust and distributing. And that tends to play out as a fractal that you see repeated. Well, that's because it's a breakout, right? And it's a breakout. So naturally, like, if people are going back and they're looking at fractals for breakout zones, well, the up moves are going to show a jump over a creek. Like, they're going to look like proportionally like they're jumping over the right areas and moving in the same direction. So, are they useful? Yeah. The problem is if you don't know what's going on and you just need some kind of a guide and you really want to look at, and I had an argument with somebody once, and they're not completely wrong, but I basically said fractals work until they don't. And what they took that as, they took it to mean that, well, eventually they're just going to stop working and change direction. And that's true, they could. Because at some point it could turn distributive locally, like it's not the same. Because what fractals don't do is they're static. They don't show you volume. Like, that's why these are both here. Because I don't really know the answer. And I could pretend like I do if I have a fractal, and I can say this is exactly what's going to happen. But you just don't know that. And I think the idea of this being a wave 1, 2 makes a lot more sense to me. Now, is the fractal going to show a wave 1, 2 on a breakout? Yeah. The problem is the fractal doesn't show you volume. It just shows you the 1, 2 according to its own proportion. And then it shows you the breakout, because you're basically saying, I'm pulling a fractal that's bullish. You're going to get the wave up. That's not always the case in the market, though. So you might have 99% of that thing looking the same way until the very end, and then it doesn't break out. And you're left thinking that there's some kind of a flip, which is what I've heard people say, that the fractal flips. It just flips around. It goes the other way. And I'm like, I don't think that's the way the market runs. I don't think it flips the algorithm. Like, I don't think that's the way it is. It might visually look like a flip because the opposite of up is down, but ultimately what you're looking at is what happened here. If this has an upthrust and then slides back through support, well, your fractal didn't do that. Okay. So it's not following the same path. So I said something like along those lines, hey, this is going to work until it doesn't. And they're often very accurate for a time because the patterns in the market are very consistent. We've talked about those patterns. Like the M creates an S curve. It almost always looks the same. Why are we able to talk about that? Because it looks the same. Why did I think this was going to come back down to 25? Because this wave left a creek open that would take you back down to 25. Why do I think it's still possible this could come lower? And it did make a dip, but it may not go all the way because it didn't backtest this creek. Same thing. Big creek jump, little creek jump. So the fractals often look very similar if you have a big top going into a small bottom. Like, it's going to look the same. Of course. Does that mean it's wrong to use it? No. Does that mean it's not helpful? No. But you have to understand, like, if you're using one that definitely breaks up, well, you have to take it with a grain of salt. It may not. I've got all these scenarios that look like they're just going up. There's one kind of buried in here that it doesn't go up. And that is the one in which it comes up to the top again and it's not able to break like 30. What would that be? Well, I've seen that before too. That's just where it's waving and becomes what we call like an extended cat ear, because then it's building out downward direction instead of upward direction. There's no breakout. There's no head fake. There's nothing like that. There's no chance of even continuing to the upside. Where there is here, yeah, there's a chance this continues to the upside. But there isn't one if you can't even manage to get this. Well, I know what that looks like, so that's why I use that. And I think it's far better for me to do that because then I can look at this and say, where is that currently setting up? Instead of looking at a fractal saying, oh, it's got to go up first and then do this and then go down and then go up, then go down. Instead, just look at this and just look at it like that. Okay, it's created a new trend. Like they're giving you the information right now. Every time there's a new bottom or a new top, you get new information. So where would a breakdown probably happen here based on all these intersecting parallels? Probably right here around 27 if it happened. Why do I think that? Because there's a lot of connection to that point in time, because there's 2-3 levels that you could reject and break down. And we've talked about these as like potential pivot points, etc. So if this breaks down, where does it happen? Probably over here, right? Makes sense. I don't have any kind of superpower in the market, but when I do get things quite right, it's usually because I'm just observing the trends and the creeks correctly. This frustrates people because it's not giving you the answer. But the truth is that that would be like, it's not a real thing. In no system is there perfection. It's just not perfect. It is not. It's, anything could happen in the market. It's not a vacuum, right? There's no preset, predetermined, perfect place that everything's going to be. I think there's a lot of that does happen on the big picture with big operators. But I do think that things can change. I believe that there is a change of character that could happen at any moment. You just don't know, you know, because things happen that people don't know about ahead of time, you know. Anywho, I digress. Do I think it's useful to use them? Yeah. I don't have any problem with folks like posting them even on our group, but I think that you have to provide more, because in and of itself, it's a static thing. It's just a path. Just like these are just static things. One thing that this considers that a fractal does not is this considers what happens here. And a fractal doesn't consider that by its own nature, unless you just pull out a bunch of them. And then I'm like, why even use them? That's kind of why I stopped using them for the most part. Like, I'll use them every now and then to like compare two areas or to show why I think something is or isn't like this. And that's fine. I think as a comparison model, you're really just comparing two regions of a chart. That's fine. But to sit there and use it as a roadmap, very controversial, in my opinion. I find that to be less than ideal. Because at that point, I'm like, why even bother? You know, if you're going to start pulling out like 30 fractals to try to understand it, just do an analysis, like do a waveform analysis. You're going to get an easier to read chart anyways. That's built on its own proportion currently. Yeah, well, that's pretty common because the ones that we like are the ones that we're going to potentially make a lot of money on. We don't like the idea that once it's made an upthrust and it loses a creek, that the fractal is not relevant anymore. So what I'm trying to trade now for the most part is what I think are more easily identifiable, really just reactive moves from bottoms to top, 32 strikes, like on GME. I don't think that that's as arbitrary as some of the other things I could probably guess at here, like going to 200 or something. Yeah. Looks like we're crapping out anyways. That's okay. Well, we'll see. All right. That's all I got for you guys today. Looking for that entry point, but it's not quite here yet. And looks like my stream's crapping